program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Auspice. Let's check what happened overnight. Global stocks rising, bond yields falling in response to a soft US private payrolls report. This as the US government shutdown took effect, which investors appeared to shake off. Wall Street's major indices gaining, with the S&P 500 resetting its record high, closing above 6,700 points for the first time. The healthcare sector was the best performer, with the catalyst for that rally being a deal Pfizer struck with the Trump administration for the drug maker to lower prescription drug prices in the Medicaid program. Checking the Mag 7 stocks, Meta was the underperformer, and Tesla's shares hitting a 9-month high after the EV maker raised lease prices for all US vehicles following the expiration of a federal tax credit that took the personal wealth of Elon Musk to $500 billion US. Shares of chipmaker Intel surged on the prospect of advanced market devices becoming a customer at its factories, while the materials sector was broadly weaker. Lithium Americas Corporation shares rallied, along with Albemarle, after the US Department of Energy took a 5% stake in Lithium Americas and a separate 5% stake in the company's joint venture with General Motors. And US listed shares of crypto and blockchain companies jumped after the US Internal Revenue Service issued new guidance for digital assets. Well, the first day of the US government shutdown has seen around 750,000 federal workers ordered not to work, while others, such as defence personnel and Border Patrol agents, are working without pay. President Trump has subsequently moved to freeze some $26 billion for Democratic-leaning states, following through on a threat to use the government shutdown to target Democratic priorities. S&P Global Ratings Economics estimates the shutdown could trim growth by 0.1 to 0.2 percentage points for every week the government is closed. And the shutdown means all data releases are suspended, including the Labor Department's comprehensive September employment report at the end of the week, which was expected to provide more guidance as to the Fed's next move. Well, the most recent piece of data, the private payrolls report, showed employment fell by 32,000 last month, bucking expectations of a 50,000 gain. US Treasuries fell in response to the jobs data, which signalled a weakening labour market. The 10-year falling to 4.1%, the 2-year was around 3.54%, and the US dollar index slightly lower, with the Aussie gaining to 66.1 US cents. Oil prices have continued to slide and are at a 16-week low, with the US government shutdown adding to concerns about global demand. Brent crude futures down 1% at $65 a barrel. Copper up 1%, iron ore little changed at $103 US a tonne. And gold continuing to rally, hitting another record as investors sought the safe haven on US uncertainty, while the softer jobs data reinforced expectations the Fed will cut interest rates this month. Spot gold around $3,865 an ounce. And Bitcoin climbing to 118,000 US dollars. Let's get across what we're seeing on the US market at the moment. Ira Epstein joining us from Linn Associates. Ira, welcome back. So, the US government shutdown, the jobs report, markets appearing just to shake that off. What did you make of that move?
Amazing, isn't it? I mean, bull markets don't die easy. And there's a lot going for this market yet. Well, first we have to talk about the pain. And there will be a lot of pain because the Democrat and Republican parties are far apart and there's not enough blood on the street yet. You need to get more blood before they'll get together and say, okay, here's a compromise. Let's see if this works, blah, blah. We're not at that point. So what we deal with is a lack of data, too. You've got people being furloughed. I have a son that's a forest ranger in California. He's actually an archaeologist for the forest there. And he's quite concerned, will he get let go? And he's got tenure and all that, but you never know what's going to happen. Then you take a look at everybody else, and you start looking at companies like SoFi and so on, and they're getting hit hard because who's going to pay the bills? If people are furloughed, they're not getting money. Corporations will get scared with this. They're not going to go crazy if you're outside of the AI business. Got to be very cautious with what goes on. So normally, if you go back in history and you look at these things, if you look at the first day of the shutdown, if you look a week out, normally you're higher. So we'll see if that is going to happen or not. Just mark that on your part. I like these little tidbits because they always help you look at the market. On energy tonight, Russia's fifth largest refinery is ablaze. Now, they are saying a drone didn't do it. They think it was something else that caused it. They're not saying what that is. At the same time, I'm looking at the energies and getting more and more bearish by the day, because I believe that OPEC is going to cut. I think that OPEC has become highly reliant on one customer at this time, and that customer is China. So if they sneeze, you've got to be very careful.
Ira, on the jobs front, so if these temporary layoffs lead to permanent layoffs, so it comes at a critical time, because you're already seeing that weakness in the labour market on top of the crackdown on immigration that Donald Trump has instituted.
You have, but let's take the ADP number and understand the number better. Remember, the Bureau of Labor Statistics, as it's called in the U.S., they put together the weekly, or let's call it the monthly jobs report, all right, and the weekly jobless claims. They had major revisions. ADP resets, and that's the word I want to use, resets their numbers every now and then as they've got to catch up with other numbers. If you remove the reset that they took their numbers because of the strange U.S. jobs report that had a lot less jobs, you really gained 11,000 jobs. You didn't lose 32,000. So that's the first thing to look at. On your comments, what's dead right is there's less jobs being filled, and there's less immigrants here to fill them. It's a combination, but if you also looked at the JOLTS report, you're not seeing the turnover. So corporations are back to what they did during COVID. They're not letting people go, but they're really not hiring right now because there's so much uncertainty as to what's going on in the U.S. economy. The positive is we'll get through the government shutdown. The positive is you will get another series, maybe one, maybe two, this year. I don't know if it's one or two of the rate cuts by the Fed. The Fed will have its hands full if in 30 days from now, when they meet, I think 28 days from now, at the end of the month, if this shutdown is still going on, because then they've got to come to the aid of the country, and that's a guaranteed cut at that point in time, in my opinion. So I don't think the situation's as bad as the news reports and the headlines make it appear. And I think that's why the stock market is acting as it is, strong. And I have no reason to not think we won't get a good year-end rally.
In the short term, obviously not getting that key jobs report at the end of the week, what are investors, traders likely to do? Sit on their hands?
It's not going to be released.
Yep.
So if you're looking for that jobs report at the end of the week, I think you're by yourself. Right now, we are not hearing that jobs report will be released. We are hearing that it has been completed. But who at that department's going to have the guts to push the button to release it? Because as it is, President Trump doesn't believe in the report. He thinks the data has been collected wrong. And yes, there may be corrections. But if all these other agencies are not releasing reports, why would the jobs report come out? So I'm not looking for a correction.
Meanwhile, Ira, gold continuing to hit those record highs. Would you be chasing it here? What are you seeing?
Absolutely not. If you're not in it here and you think you're going to buy it at 3,900 and it's going right on up to 5,000 for you, best of luck. I've been through these things before. I am not bearish. But chasing this type of move is fraught with massive problems. So where would you put a stop? If you're saying I'm going to buy it for an investment, okay, but do you still want to buy it at 3,900? Do you want to wait and see on the first pullback in the market? That's where I'm at. I'm probably the most bullish character you've run into on your shows because 7 months ago, 8 months ago, I told you once the Fed begins cutting, they don't stop. I said we'll never hit, and I said this a year ago here, we will not hit the Fed's goal of 2% inflation. You're already hearing Fed members coming out and saying we're probably closer to a neutral rate than people are giving the market credit for, which means that's out of sync. It's not going to happen. And when you hear dates, well, it'll happen in 2027, 2028, 2030. Well, maybe eventually it'll hit it. But there's nothing there at this point in time to say that inflation is going back to 2%, and that's the element that gold thrives on. However, there's nothing to say that inflation's going to pop up here and drive gold a lot higher. Gold is now in the way of fear. Gold is betting that the US dollar is going to break. So far, that bet isn't panning out. The dollar is being stable at this point in time, and I think you've got to consider that. If the dollar gets under 96.82, that will take out, and by the way, it's only 50 points away from that. On a chart, that takes away the bullishness. It doesn't yet enter it in the bear camp, but it will take away the bullishness in the December contract, in my opinion.
Ira, great analysis. As always, thanks for joining us from Linn Associates.
Thanks, Brad.
Let's turn our attention to the local market just ahead of the open, and we are expecting a positive start, up 0.5% for SPI futures, following on from a positive session globally. Stay with us, we'll get right across that in a minute or two.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.